And Candy, I know we'll be talking about this, but let's get into it. What's hot right now? What's happening?
Oh my God. Well, first of all, everyone's moving here, as we know, because you can't get on the roads anymore. I mean, there's cranes everywhere. Everyone's building. I'm looking at Census Bureau results, and 159,083 moved to Houston last year. 144,704 moved to the Dallas area last year. So we're really picking up. The market continues to be hot. Annie and Kenneth, you jump in and correct me because you're a little bit more in the trenches than I am. I'm hearing that homes, if they're anywhere under 500,000, they're gone. I mean, you better just really get them and get them quick. And the interest rates are still low, and I've not been able to put my finger on what it is that's keeping them low. Personally, I think that our political scene is having a little bit to do with it. You may have more insight on that.
I sure would hope I have more on that.
Yes, you do a little bit more.
That's kind of why I'm here.
But the interest rates are. We heard they were going to go up this year. I mean, I remember writing that story end of 2015. Get ready now, and I'm sitting there going, I should have bought something now. They're fine. They're great. What are the rates now?
We've actually seen some improvements in those now. Last couple of days, and we got into that in the weekly market update. Last few days this week, we saw them tick up. But over the last month, we've seen them improve by almost a half point.
Yeah.
So now they were at a little bit of their highs. They were in the low 4s. They came back down to the high 3s, mid to high 3s, depending on credit score and down payment and all that. So no, you're right. Rates are absolutely phenomenal. One of the reasons that happened is that it is part of the political climate, but if you look at just what's been happening globally, what's been happening with oil and stocks, and just how the Fed has been talking about the economy not quite being there, that they were all betting that the economy was going to be at a different place. Since it's not, the short of it is, they're like, well, we can't make certain moves, and that's good for the bond market. Right. Stocks have been suffering, even though they're way high. That bull got tired last month. That money flows into bonds. And then again, when there's millennials, they're first-time home buyers, they're late 20s, right? We're seeing a lot of early 30s. First-time home buyers, and they're not buying a $150,000 starter home. We're seeing them buy $300,000 to $500,000 price point. Are you guys seeing that as well?
Absolutely. And the other, the reason why the millennials didn't jump into the market is, number one, the college debt. That was huge. A lot of them were surprised, and that was the banks again that were like, "Oh, here, take this money," and they're like, "Oh, you got to pay it back sometime," So they were hit with these huge, bills for funding their education. The other reason is they're more mobile. And you don't buy a home if you're only going to be in a job for 6 months, 8 months, a year. So a lot of people were so mobile that they didn't want to settle down that way. A lot of them went to New York and worked, went to LA and worked, then they came home to Dallas and said, okay, now we're going to settle here, we're going to buy a house. Yep. So that's what took the process longer. But of course, the urbanists, jumped on that for like, the millennials aren't buying homes and tried to freak everyone out. You can't listen to those people.
No, you can't listen to those people. And it's a big deal. You mentioned about rent, just to go back to it. Yeah, when it's $800 a month for rent, well, you may rent. When you're now all of a sudden it's going up to $1,200 to $1,500 just to get a decent place, all of a sudden buying a home starts to make a lot more sense.